if you're kind of casually looking at the news, NVIDIA is basically flat. Maybe it was down 1% the next day, and it's slid in the aftermath of earnings as kind of a lot of selling has happened in kind of the broader momentum space. So you could be mistaken for saying, well, this wasn't a very interesting earnings. The reality is this was an extremely interesting earnings. It was a very solid quarter from NVIDIA, and their stock was up 80% since mid-April headed into earnings release. When your stock is up that much, you can only kind of exceed expectations by so much. The other point, Austin, too, we'll analyze earnings on this show because they are important for kind of assessing whether or not the trajectory of companies is the way that you expect. But the short-term reaction, both in positive and negative senses, definitely tends to be an overreaction. NVIDIA has declined more than it's risen post-earnings over the past 2 years. In what direction is the stock chart, right? So if you were only investing the day after earnings, you would have incredibly negative returns for NVIDIA. If you had bought and hold, you would have been up several 100% at a minimum. I'm not sure on the exact numbers. Now, this quarter was extremely complicated because, as you had noted, analysts haven't known how to reintegrate sales to China. That's a very material area. You often see reactions to earnings where a company might beat or miss by a few percent, causing 5 or 10% swings in share price. NVIDIA previously had 20% of sales to China. They're forecasting basically zero in the upcoming quarter. So they're removing 20% of their business. And technically, while they can sell to China, there's been geopolitical reasons why they're not factoring that into their guidance. So, Austin, if we remove China from the equation, I went through and I looked at the numbers. In the first quarter, backing out China of this year, NVIDIA did $39.4 billion in revenue. In the second quarter that was just reported, that was $45.5 billion. And their guidance for next quarter, Q3, is $54 billion. Austin, to put that in context, if you exclude China, that's 19% sequential growth, so quarter to quarter. Most companies would kill to have 19% a year. They're having 19% from quarter to quarter already at the size. And even if we do factor in the fact that they had some sales to China last quarter, not forecasting it next quarter, this is their highest sequential revenue growth in 2 years. So we look back at this journey, all this talk about NVIDIA's growth, it becoming the story stock of the market. Right now, they're experiencing their highest sequential growth in 2 years, which is really amazing. And Austin, the reason for this, we've talked a lot about on the show of NVIDIA releasing a new platform of chips, Blackwell, and that this would be the biggest technology launch in history. It's not going to have the same attention of an iPhone because there's no Steve Jobs on stage. There's no everyone with this in their pockets. There's no talking with your mom about whether or not she's going to buy the new iPhone. She's not buying a new Blackwell chip, right? But in terms of profit generated, in terms of how this moves the technology space forward, this is the biggest launch that we've seen. And all points show to this ramp happening earlier than expected and having massive implications across technology. One thing I'll note, Austin, too, when we look at Blackwell right now, they're already seeing this. I believe it's like 70% of their revenue already. Blackwell is just being used for running models. There's actually no customers using this for training yet. So that's an important point when we look at where we are on this ramp. It's still extremely early. The other thing I want to note, Austin, behind the scenes, a lot of selling happened in NVIDIA. As I know, they're up 80% since April. And the reason was earlier this year, there's a lot of chatter from the supply chain that Blackwell was generally disappointing. Customers were having a hard time with it. And that is true. This is why it's being used in actually running models. That's a lot easier than training where you need to connect hundreds of thousands of chips together. So that's why we are mostly seeing that. But the other side, NVIDIA actually employs more people to improve their software than the actual chips. And what we've seen is an analysis from SemiAnalysis, which is the top researcher in kind of matters like AI data centers. They found that in May 2025, what is that? That's just 4 months ago, the new NVIDIA chips, the new platform, GB200 racks, they had worse economics than the older chips by about 9%. By July, they were 1.52 times better. And by the end of the year, they believe these new chips will be 2.8 times better. And that's largely thanks to a lot of software improvements, let alone all of these companies getting these systems at scale and figuring out how to increase the uptime and all the other things. So, Austin, I know that this is a lot to take in. I'll pause here in a minute because I do want to give you a chance to react. But the main point here is it continues to show that number one, not only is NVIDIA being able to deliver on this most important product ever, but number two, why a lot of this capex is increasing, because if you're a customer, if you do not make this next upgrade, you might as well not be in this race because these chips are so impressive. And this launch is going to be continuing to flow through. And as we'll talk about in other company earnings now, we're seeing all the downstream impacts of how this is rising the tide for all the other companies in the industry. So, Austin, NVIDIA, not a big earnings reaction. A lot of information, though, from these earnings about Blackwell being on track, being in many ways bigger than expected, and that has massive implications across every company in the portfolio.
My biggest takeaway hearing you talk about this and seeing these earnings is just a reminder of the scale and therefore the time cycle that a lot of these investments need to be considered. So we see AI news every day, so it feels like the news is happening, day by day, and we certainly talk about a lot of the news. But when we sort of take a step back, we've been talking about Blackwell for over a year, and yet most of these chips are still being used for inferencing, not for the next generation of models. And that makes sense. You have to build these huge clusters. You have to build new data centers. These models are hard to train. So we have seen Blackwell coming for a year, largely through the lens of being able to train these next generation models. And we're still not really there yet on the execution end. That doesn't mean anything is going wrong. That is just how long it takes for these things to hit the next cycle of this trend. So there's always a lot going on in the AI space, but we need to remind ourselves of some of the scale involved here to manufacture these extremely complicated chips, to ship the volumes necessary, to then make all these major interconnects in order to go train the next generation models takes a year, 18 months, 2 years. So you have to remind yourself sometimes of how long these things can take. And I love that stat from SemiAnalysis. I hadn't seen that, but that's really powerful validation for the potential of these chips here.